Hi, everybody. Welcome to the Misfit Happy Hour. Today is May 4th, the first time the Fed's raised rates a half a point in a long time. We just lived through literally a 4% move without a pullback to the upside. And so I hope you survived. With me today is Wall Street Jesus, or Jay as I call him, and Peter McEwen. Very grateful to have us. Hey guys, how are you doing?
Welcome. What's up? What's up, everybody? You look out of breath, Chris. You sipping your drink and you're out of breath.
Oh, I mean, Peter was on another webinar the other day, and he said this is some next level shit.
Yep. So it definitely is craziness. Absolutely.
I think it's a great, Peter said something really great. He said, I've been around people who teach enlightenment stuff or claim to be enlightened, and he goes, they ain't never traded an S&P.
It's true, right?
Yeah. Those people can barely drive themselves to the store a lot of the time and pay their own bills. So just in the Buddhist world, I don't know about the broader spectrum. But.
The spiritual gurus have never had a short position in an up market.
That's the truth.
I was betting short today too, to be honest. I was holding puts TQQQ and got very lucky, but disaster for shorts.
You came in holding puts, Pete, or you just today you put them under intraday?
Well, I saw that level kept rejecting price from Monday. Remember Monday, they at the end of day rebalance, they bought, drove price up, got stuck there. And I was like, okay, maybe, then your wheels start turning. I'm like, maybe, it's going to get rejected there. And we're going to see one more downside move and retest that low before.
Yeah.
It was dumb. Yeah. It was 50-50.
It's not dumb. If you would have cashed a ticket, you would have felt like a genius. This is, you know what I mean? This is just this market will make you feel so dumb because of how violent the moves are. You know what I mean? It's one thing when you're wrong and it develops over time, but when a move goes against you instantly and Chris was saying, rattle off 3% in the snap of a finger, you feel like you're an idiot. You know what I mean? How can I go the other way? But that's the type of market we're in on both sides right now. Just
what I've been seeing the past few weeks is it's a market that, whether consciously or unconsciously, I don't really have a tinfoil hat on market moves too much. I don't think they're out to get someone. I just think money's moving around.
Yeah.
But it feels like they're out to humiliate people. That's today's move was wow, you really wanted to show the short something and you did. So I don't know. That was the counter trend move. It was big.
Peter, right? Peter, I think you're talking about the idea that there's no real clean exits. In the old days, there was some sort of, and Jacob probably tells many stories about this. If you found a point of resistance, or say the wide spot in a profile, and the market was rallying up to a wide spot where it had traded a lot before, or a moving average or a VWAP, and you were wrong and it went against you, they would usually give you a look back to get out at a scratch.
Exactly. That's what I meant. You feel like you're a dummy because the move is so violent. It's almost like spitting in your face how wrong you are of how violent the move is.
And now there's none of that professional courtesy, or shall we say the humiliation that you're feeling is just the nature of the change of the market that's taken place. There is no clean exit.
Yep. And this, Chris, I listen, maybe you want to call it a tinfoil hat, Pete, but these aren't human beings. This is pushing buttons here. These aren't I'm watching the flow today and how the flow changes when the tide starts to change, and just the type of buying that's coming in. Today we saw in the squeeze, okay, and Pete, you've seen this enough. Weeklies, and more weeklies at the money, in the money weeklies. So it's not players speculating on upside. These are machines that have to get their whatever exposure on. You know what I mean? For whatever reason, gamma reasons. You know what I'm saying? So these aren't like back in the day. Where again, I don't want to sit in my rocking chair sound old, but it felt like you had more human experience going on, right, Chris? You were more humans involved. What I'm seeing on a day-to-day basis cannot be processed by human beings. They're just not that fast. They can't react that quick. You disagree, Chris? Or like these are programmed. In other words, what I'm getting at, these are programmed algos and machines set up for different instances based on the VIX, based on levels, whatever it may be. And when the VIX cracks a certain point, they have to react, and these machines have to put exposure back on, right? And that's the type of flow I'm seeing.
You can rationalize the behavior to cope with the humiliation that we feel from being so wrong. Right?
You're right. Right?
We're still stuck with the idea that, when we're wrong, it's ugly.
Yeah.
And
well,
it's,
there were twice the amount of SPY trades today than, I think I just read 384,000 SPY trades.
Twice the normal amount. It's just
it's like, that's to Jay's point, that's machines leveraging against VIX.
Jay, sorry to interrupt, Pete.
I'm rambling, sorry.
Jay, did it seem too obvious?
Here's where I was kind of had a tug of war going on in my brain today. Okay. And this always happens to me. Anytime I'm hoping for a pullback, just buy. Okay. Don't even tell me you're buying. Don't try to piss me off. Just buy. Because anytime I make the remark, listen, okay, the ideal scenario here would be we get some weakness and we can look to buy that. And then sentiment's really washed out enough till we get a squeeze. Just buy it because they see it. Again, I think they're machines, but the robots see it and they're not going to let you get that pullback, and I'm too dumb enough to realize this and fall for this trick every single time. Okay. But what was going on in my head, and you could relate here, you guys, on a psychological level. Okay. You have investor sentiment. Okay. Now we're talking about investors now. You got different class of players in this game. As bearish and negative as you will ever see it. Okay. I'm talking about you have to go back to 2008 Armageddon type sentiment to see these type of levels. Okay. Now these are investors, players who aren't moving tactically. They're not trying to catch a squeeze off the Fed. Okay. They buy and they basically hold. Okay. So they're really negged out. So you have that bearish extreme on one side. And then what you've had develop over the last couple of days into this morning, the more tactical players, the traders, those type of players, hedge funds, they see that sentiment just like we did. And now they're trying to play for that tactical squeeze off the clearing event of the Fed, right? The Fed doesn't say anything new. That gets out of the picture. VIX deflates, squeeze, right? So it was so obvious. Okay, this setup was so obvious. To go back to a couple of webinars when I was on here, Chris, we spoke about this.
Yeah.
You say to yourself, wait a second, what's the contrarian play here?
Right. We had it. We were completely right.
Right.
And
so
now it just seems too obvious.
Exactly. Wait, so it's extreme bearish sentiment, but now there are enough people noticing that bearish sentiment. You understand? So that's where I was kind of stuck to where the easy road for me was just to come in and react. And obviously, you're not going to make as big of a dent reacting as opposed to, placing a bet and looking to be right and cashing a ticket. So that's where I was at today. And it's frustrating, because I wait for these type of setups, constantly. And when it gets pissed on like it did today, you want to choke somebody, but it is what it is. This is the game. But that's where I was at today. And that's why, like I said, I told you guys, when that VIX, right after I think it was like towards the end of the conference where Powell was speaking after the decision, when that VIX, you could see a leg down. It just crashed the floor,
Yeah.
you knew that's it, game over. You know what I mean? Because
Yeah.
that's what I'm saying. They react to the VIX. You watch when sentiment gets washed out, it's all about the VIX. The VIX starts selling, they start aggressively buying, and we see it in the flow like magic. Like, where's that come from? All of a sudden, people are feeling bullish. You know what I mean? They're set up that if the VIX cracks levels, they got to start putting exposure back on. And I think that's why you get these type of moves, right? And you gamma too, right, Pete? You follow that stuff. You know what I'm talking about. You know.
Well,
So
my errant decision today was based that the SPX was not hedged. So I was like, okay, so
right.
the bottom could, usually we need to see like big hedges unwind to get. Usually that's a 2-day move. What we saw at the close today. So
yeah, and exactly, we get it in a day. So that's kind of, Chris, where the comment he just made, where I was torn, right? If you pull up a put to call ratio, okay, you see a nice spike over the last week, and then the past couple of days, including today, it started coming down, meaning that players already were starting to unwind their hedges. That's what Pete's talking about. So you had tactical players taking off their hedges ahead of the Fed, and Pete thought the market gods might catch those guys, right? All right, wise ass, you taking your hedges off? Let's give it to you.
They have been for weeks, so I thought this was just going to recapitulate that. I was wrong.
The only problem this time around, and again, it's easier said after the fact, is that you had bigger picture sentiment, Pete, so washed out. Like, I don't know if you have it around. You look at that AAII investor sentiment. Did you see what levels we're at? You know, it's craziness. Advisor sentiment came out last night. I had to take a double take. I thought it was a misprint how low it was. You know, it's unheard of. So it's kind of, you had that tug of war go on today, where you could really see any of the two come out. And that's why we were talking about the Gamma Gang. The play was, they went long calls, long puts. That was the play, right? Because it was going to be a decent move no matter what, the way things were set up.
Hey, just a caveat to our listeners. Jay's talking about sentiment and how it has been a contrary indicator, and it worked very well today and since the lows of the past couple of days. But in the NASDAQ Internet Revolution in 97, 98, 99, where the NASDAQ doubled year over year, sentiment at that time was extremely positive the entire time.
Oh, let me tell you something. And this is coming from a sentiment guy. That's why I'm a realist more than anything else. If you look to try to catch tops off sentiment, you can be wrong often. It's wrong often. It's really difficult. You'll have your scenarios and times where you're right, but that's almost like the worst thing that could happen to you, because then you think you can nail every top and you could get run over like Chris is talking about in the late 90s or the COVID rally. Sentiment was hot, right? Halfway up of that rally, and it just burned right through it. So a lot better with bottoms. But even now, Chris, sentiment's been washed out to the point where you usually see a decent bottom develop. And not only that, a decent rally off a bottom. It hasn't really happened here, you know, for whatever reason. Maybe because the Fed is, like we said, rigging the game the other way, you know, whatever it may be. But the first time in my career where you've seen sentiment readings like this and you haven't seen significant rallies.
I wanted to see more people calling the bottom. Like I saw Monday or something, like a few people, you know, obviously you don't want to keep heavily shorting after like a solid month or 10 days or something, 10 trading days of like downside. But, you know, the FinTwit people were like calling bottom. And I was like, fuck you. I'm going to play this
I can't go on there anymore, especially when I'm looking to put on a trade, because I'll find something on Twitter to talk me out of my trade. I'll see some jabroni on there pumping how he's long the market, right? And I'm looking to put on a long, and they'll talk me out of it because this dummy over there who don't know his ass from his elbow is getting long and getting cocky about it, you know? So you just got to be careful. But one thing I would say on the short side, okay? One thing I would say on the short side, and I know there's been a lot of money made, especially in individual names. When sentiment gets washed out, Okay, there's still room to make money, but you really got it. You know what I mean? Your timing's got to be impeccable when you need to get out of the way. I'm talking about overnight short positions. And you're better off just waiting till that extreme sentiment subsides, even somewhat subsides, and then start to look for short entries, because these type of moves, you get caught in these things, they can really nail you. They can really nail you.
Hey, Jay, time out just for a sec.
Yeah.
Along that lines, there was this guy, Michael Murray, used to trade on the floor using a RSI and a Stoke
Okay.
thing. And, he'd wait for the third sort of lower high in the RSI before he would even start to look at possibly selling something. In other words, and when Stokes are pinned to the top,
Yeah.
He wouldn't touch them, but he said that the biggest moves occur as the Stoke moves through.
Comes out of it, right?
Yeah,
I had a guy who used to do the same exact thing. You're talking about RSI divergences,
right? And Stokes.
I used to sit next to a guy who used to do the same exact shit, Cady. Same shit.
Right.
So I know exactly what you're talking about.
But like you're saying, right, instead of it's almost better to wait until you start to see nascent signs of a reversal before you get involved, even though the technicals are lining up in your favor to act.
Right. It's almost like confirmation, right? That's basically
kind
of looking for confirmation. But listen, all that being said, and I hate, because I every time I hear myself, guys, all you guys out there, I'm not trying to make anything sound easy about this game in these times, okay? It always sounds so easy. The chart, you look at a chart, it makes it look so easy. When the market's moving like this and this quick, it's ridiculous. It's ridiculous. It is so difficult.
We're used to trading within boundaries, right? Both emotional and tactical, whether it's reversion to the means or any sort of technical boundaries that we use. And especially Peter, do you see the market moving to places that it's causing people to act emotionally?
Go ahead, Pete.
I'm a range trader because I work with Steve Hammer a lot. So today we made a new high. So in his opinion, range begets range. Today was a news event basically. So what was the question?
Peter, my question is along the lines of that everybody seems to, essentially we're bounded by rationality. We're trying to do what's logical, right? We're trying to do things that make sense when we trade, right? So we have a lot, so you can go home and look across the dinner table and say, I did this because of that. I had a reason for doing what I'm doing. But the market seems to be moving in ways and speeds and magnitude that have now stretched our boundaries in regards to both either logical or reasonable expectations for having trades. It blows past any sort of boundaries that we've had prior. So that's leaving us with these emotional situations where it's in a sense like the market's price behavior is creating an emotional response collectively across the entire spectrum, because none of us have the boundaries or the logical or the rationality. To Jay's point, it's machines.
Yep.
But for the humans that are left there, we have, what are the boundaries that, and so my question is essentially, is there a method? I mean, in a giant philosophical question, it's literally like you're dying. It's like a tantric sadhana in Buddhism, where you're dying and being reborn every day, because the extent from which the market is moving beyond what you have ever experienced before. So it's like you're literally dying and being reborn.
Yeah, and things change every single day. So it's like I agree with it 100%. I mean, for me, Chris, without a doubt, one thing that's for sure in my style for position trades, I used to be able to have enough time to work out positions, take my time buying. I never felt like I was in a rush. You know what I mean?
Yes.
I could look for better entries.
Oh, Grandpa, tell us again about.
Oh God! Now it's like anytime I want to put on position, I got to make sure. Listen, don't get cute. Just put it on. Okay. Don't worry about losing the money. And then when you start to see confirmations, you can add to it. But if you don't start putting shit on, there's a good chance that you can lose the setup completely. You know,
and it never comes back.
It never comes back ever.
There used to be a chance where if you missed the first time on the retest, you could get back involved.
The word you just said, retest. People who used to swear by that word when I got into the game. Always wait for the retest. Never chase. Always wait. They always retest. Those guys are lost in space in this game. You know, Drunken Miller, Stan Drunken Miller.
Yeah.
I saw an interview with him. He made the same exact point. He said the stuff that used to work that he used to use and swear by in this game, like a retest of a level or lows, which was a cardinal rule for him, he had to take it and flush it down the toilet bowl, because if he stuck by it, he couldn't make any money in this market. You understand? Like, he would wait for the retest every time, and there never would be a retest. And when there was a retest, it was because it was breaking down. You understand? And he never got that opportunity as an entry. So, you know, it's not just us complaining about this. I mean, you're talking about legendary guys out there. This game has changed drastically. And listen,
so does that mean if you get a second chance, you don't want it?
Right. Now think about that. Throw that into your head on top of everything else. Right. Now, when you get that second chance opportunity, you're thinking to yourself, whoa, why are they giving me that second chance opportunity? Maybe,
right.
You know?
Yeah.
Usually they gun this thing and they don't let you get in. Now they're letting me get in. Right. And if I had $1 for every time I've said that and missed the move, I'd be on my own island right now. You know?
Oh, Jay, go ahead, Pete.
Oh, to speak to Chris's point, I gotta wonder if the market gods hire behavioral scientists, you know, to some degree, because basically what they're trying to do with big ranges, people can survive, because even if you make a mistake one way, the range is so large, there might be a retracement. You might make like a 50% of that money back in that position and survive to trade another day. But like from a psychological or like meditational perspective, what the market is doing consciously or unconsciously is driving traders into what in Buddhism we would call like an incarnation, right? Because you're trying to support a familiar regime of reality. That's what FinTwit is always trying to do, is like get people to onboard and support your regime of reality in order to like have an attitude about like how to trade. And then, you know, throughout the day, we go from like gods to hell beings to animals, you know, so you go through these 6 spheres of like behavioral aptitudes. And so I think my bias is like stay human all the time, because humans are like in the middle, right? And then market gods and like demonic forces.
And
so
the
you want
right?
you want to have like the ability to stay uncertain, like you were saying at last night's note, Jay, like stay unbiased,
right,
as much as possible. That's the only thing we have going for us as humans.
You're right.
That's why we survive and flourish, is like our capacity to stay in an irresolvable position and just make decisions based on not knowing.
Listen, you're not going to beat them at their game, right? No matter what, you're not going to beat them at their game, right? And like, if to my point, if I'm right and you're battling machines, you're not beating machines at the machine game. It's not happening, you know? So to your point, you stick with, you know, the stuff the stuff you can control, and work off that.
And learn not to trade. And I think I was going to say that to Chris too. For the average participant, I took one trade today, you know, because I just know when VIX is elevated, it's fucking crapshoot. Sorry for my language. It's a crapshoot. So, you know, anything can happen, especially with J-Powell talking. So,
Hey, Peter, that was a great explanation about the emotional aspects. And to our listeners, there's these many different realms in the Buddhist path, from hell realms to highly evolved realms, which the monks are trying to achieve to get out of what they call samsara, which is this realm that we're in, which is considered a broken realm. And essentially, a lot of their perceptions of reality are predicated on trying to see without the filter of the self-projected sense of illusion, which is yourself. And it seems to help in trading to avoid having a certain cheerleader perspective. And perhaps what the large ranges are doing, which is agitating both myself, Peter, and Jay,
Me too.
right, is that it's by having these large ranges, it's drawing that inner cheerleader, or how it affects us individually, because we're not used to the scope or the magnitude or the speed of
Yep.
these moves. So we become personally invested or affected by it, and we lose the ability, as you were saying, Jay, to remain unbiased. Is that
Yeah,
right?
yeah, exactly.
And so, the only metaphor that which is why I requested Pete, please come on. I was like, Pete, is this like literally, without getting too philosophical, it's like literally you have to reincarnate, you have to shed the skin of your former projected sense of self, and these were the boundaries from which I had. If I'm going to trade today, anything is possible.
Yeah, I mean, I think the Buddhist idea is dissolving fascination with personal drama. That's the fulcrumatic ability you illuminate by meditational practice, physiologic, like yogas and all these kind of like they're disciplines, really. And I think, we add a layer of personal commentary to everything that happens. And that's the hallucination that gets us into trouble, right? Because it always wants to have some sort of like foundational support, or what Einstein would call a 0 point, right? Relativity works without a zero. There is no like specific place in space you can like orient everything else. So we're always falling off. The metaphor that's used often is like, you jump out of the plane, but then you realize you have no parachute, but it's okay because there's no ground to hit. So we're always free falling, and like we come up with provisional formulas, and 90% of the time they just bring us suffering because there's no actual referent in the world to point to, especially in the stock market. That's why I kind of enjoy it as a meditation practitioner. And right now it's incredibly amplified. And some people would make a case that we're turning into a different kind of human being because we're parsing, massive amounts of data, and it's evolving us into a completely different animal. So I don't know if that's true or false. And I think that's the kind of suspension of belief we have to take in this specific market, where they're fucking with us. It's like a dream. It's like a dream that's happening. And you can play it. Like I've made a positive P&L this year by staying in trades for like 20 minutes at a time. But if I was a portfolio manager, I would be screwed. I would have to be a completely different person to deal with this. Sorry.
Exactly.
Really genius. Thank you for saying that. Jay, do you think that the market behavior, the way the price action is, and certainly we heard all afternoon about price stability, but you don't see it in equities. Do you think that the way the collective behavior of the markets, the way they are acting now, will have some sort of outcome in the summer? Like, will there be riots again? It's so wild in the markets. It's got to transmit, in my opinion, it's got to transmit to something happening outside on the sort of social.
Yeah. I mean, I've heard this before. Like you can remember 2008, people were making that point that it was such a sustained period of time where, it was just a complete debacle. It was such a disaster, right? Things blowing up, companies getting bailed out, right? Corporate America constantly getting bailed out while the regular guy out there gets the short end of the stick. And a lot of people thought it would lead to, big change as far as riots and everything else. And I guess it did, but not to the effect that they were, that they were making it out to be. So I think like Pete's saying, I think what's going to happen is a lot of times, just like on the way up, it's going to change a lot of players in this game, right? They're going to think this is the norm, right? They're going to think these big ranges and violent moves are the norm. And when the market conditions change, it's going to be just another behavior that they're going to have to crack and get rid of And it's not an easy thing to do, right? So just a quick example. Anybody who's new to the game, right, who's been
Right.
trading post-COVID, right, thought this market, you buy every little dip, right? There's no violent moves. It's just straight up. You buy the weakness, easy money, right? And even though they were being told this doesn't last forever, and even if they acknowledge that it doesn't last forever, they were doing it so often and for such a long period of time that how do you think they react when a market turns like this? You know what I mean?
Well, hey, what would you teach them? What would you tell them that they should learn? If I agree with you, right? And Pete too probably agrees with you. Pete, would you agree with that? There's prior to this recent sell-off from the beginning of the year, we've just had a monoculture. The Fed created this one animal market where the behavior of people who are successful and successful social behavior is contagious, and that was that people would buy every 3%, 5%, 6% dip, and then time would bail them out. And so Jay, what would your advice be to people who are in that camp, who now don't know what to do?
Listen, the easy answer is the same thing that I was told, and every one of us were told, was you have to be able to adapt to each and every environment. Okay, nothing in this market's ever the same. It may last longer than you thought it would, longer than you would like, but it's never the same. That's the beauty of the market. Okay, but like, again, everything's easier said than done in this game. I'll give you an example from me, and I'm in this game over 20 years, right? Going back to the post-COVID rally, I've been working my whole career on disciplines of waiting for those pullbacks, not chasing, not buying the same name I just sold a week ago at lower levels. You know what I mean? Like, I built almost like the 10 commandments off my prior experience that drove me nuts in the COVID rally, because none of that applied. You felt like a jackass because if you were disciplined, it ended up costing you money, right? If you sold and didn't get greedy on the way up, you were wrong because it kept going higher. So,
let's give Pete a chance. Pete, what are some skillful means
to deal with the speed of the market?
No,
yeah,
just a change of environment, right?
Right? Yeah,
every
like
market's different.
Right, like someone comes up to you and says, "Hey, I saw you on Misfits. You see things." Right?
Or do I? Yeah.
Yeah, you see things. Like, what are some skillful means in this environment?
Well, I think the biggest skillful mean from a meditational perspective is the ability to rewire your brain. I mean, this is not Buddhist language, but it is a result of Buddhist meditation, is you can rewire your brain to basically stay in a state of total relief despite like external circumstance. And then you see more clearly. You don't get stubborn about making an exit, taking a loss.
Can you, would you say stay in a place of total relief?
Yeah. Okay. So the fundamental state of a human being is open mind, because you don't know what's going to happen. Like that's the enlightened mind, is like, so you can interpret it two ways. You can either say open mind is an enlightened state, or you could say open mind is like an anxious state of anticipatory self-destruction, right?
So hey, time out. Let's dig into that. What are the character traits associated with an open mind? Curiosity, courage, right? Along those lines, right?
I mean, I think it's just operating without constantly referencing the hallucinatory self-image of like Peterness. Like, what would Peter do? Should Peter take the loss now, or should Peter wait until we squeeze 4% and then, just fry my puts, right? So I think that's what most traders are dealing with, right? It's like a bias, and a bias is born not of open mind. A bias is born from like a contraction around a thesis. And so the problem we tend to do from a psychological and meditational perspective is we want to apply a formula to something that's fundamentally irresolvable. In this case, the external provisions that the market is providing are like magnified uncertain. And so the trader, he or herself or themselves, probably would do best to strengthen and fortify their nervous system to like endure incredibly like strenuous stress states, almost like a fighter pilot or like a professional athlete in a World Series or something. That's unfortunately what the market's doing to traders, but when things do stabilize, everyone's going to come out the other end and probably feel a little more engaged in uncertainty and not trying to enforce formulas, because that's what creates suffering, right? Is the constant enforcement of a formula. And I think one thing I did want to bring up really quickly is when I talked about spiritual path as being, you know, for some people, it might be the stock market. It's going to work better if you have vulnerabilities around money. And I would say someone who has vulnerabilities around relationships, they should be in a relationship, and that will probably help them like understand uncertainty, not always getting what you want 50% of the time, because that's how we relate to reality, is like we get what we want half the time. And the other half the time, we need to deal elegantly and not destroy ourselves in the process of like living our lives.
Right.
So that was a long monologue.
Wait. But how? Well, you mentioned you wire your brain. What's that process like? You rewire your brain. How is that you're talking about through meditation? How? What's that?
So basically, you create a negative memory in 1 second, and it takes 10 to 13 seconds to create a positive rewiring of like resilience. I can do this.
Right.
Hey, maybe we'll get a retracement here. It always works that way. I mean, it doesn't work that way anymore. Right. But
yeah, Jay, there's a default. Human beings have a default to suffering schmuck.
Right. Yeah. So it's called negativity bias in science circles. Like your ego or your self-image is always looking for a threat.
Right. Yeah. That makes sense.
And so what we're trying to do is train ourselves not to like completely collapse into that hallucinatory state where it's like, oh my God, if I go long here after Jay Powell, I'm going to be destroyed, which would have been the smart thing to do. Right. But I had a formula. I came in today. I honestly did. And I rarely do this because I tend to follow the tape, but I had a bias. I got away with it a little bit. But so to your point, Jay, neuroplasticity means you can change your brain. We come into life with an animal brain that is looking for trouble. And over time, we need to like train it to also look for opportunity. And to look for opportunity takes 10 times the effort.
Wow. Jeez.
Okay, I'm done.
Okay. And so, you can see those results, as a guy, you can see those results when you go to a bar and you try and ask a girl out, and she'll always be like, no. I mean, we always get no. And in trading, right, 8 out of 10 people lose everything.
Yep. And
so, right, there is reason for the biases that of the negativity biases that we all have. And I mean, they're should we say they're a product of instincts and generations. Is that right, Peter?
Well, the generational trauma thing does happen at a genetic level, but it just means you have a more, like your genes will be more inclined to adopt anxiousness, panic around like vulnerable feelings. Some families maybe don't have a lot of generational trauma in their genes. So, it's not like a psychological thing, but it is hardwired into certain people.
Steven Pinker did a thing about that. He wrote a paper at Harvard about how exactly what you're talking about. It's on the web. You guys can find it.
Well, that is genetic?
Yes.
Yeah.
Wow.
Yeah. So like you were saying, Jay, you said that some people are not wired.
Right.
for this. Remember that?
That's the thing you sent me. You sent to Charlie to send to me. I looked
Yeah,
at.
right. Did you catch that?
Yeah.
And
Wow.
and then so Peter, as you said, and when you're doing that recent webinar with Steve Hammer, you were like, yeah, this is some next level shit.
Which part? The reading tape?
Yeah, no, just the emotional and mental part about trading lately.
Yeah, I mean, can you, if you, it only if you have vulnerable feelings around your money. Like, you know, if you're just here to gamble and have a good time, you know, like I've heard Jay talk about his dad. He's like, sometimes I win, sometimes I lose, and it could be like massive amounts of money.
Right.
Maybe he didn't have his self-image wrapped up in that success. So from a behavioral perspective, the meditator needs to figure out what is the most. That's why we do what you were talking about earlier, like charnel ground or like death meditations. Most of us have vulnerable feelings about being extinguished. So that's a good object to contemplate. And I think we live in a Western culture. So trading the stock market has a death feeling, like, oh shit, I lost all of our money.
Right.
What am I going to tell my wife or whatever, you know? So we need to assess those kind of, you know,
I mean,
let me condense all this.
Yeah.
The thing, our brain cannot tell the difference between life and death and life and inconvenience. Okay, so a loss is just an inconvenience, but our hormonal system will have the same adrenal uptake as though we're dying.
That's crazy.
So,
and to the people who are listening, a death meditation is basically quite simple. It's that you meditate on the fact that your death is certain and the timing is not. If you wish to go down that road, it is part of the Buddhist practice.
Right. And that's pretty much they use that because that's everybody suffers with that, right? That's what you meant by right? That's in everybody. So
that's what the mammalian brain is obsessed with, is social connection and being extinguished. And also the, you know, like the hindbrain or the like more primal brain, its whole configuration is built to keep you alive. So we're talking about 3 levels, provisionally, of like behavioral aptitude and evolution, right?
Right.
And then cultural evolution, like learning to fit into a society, treat people with kindness,
ethics,
others. And then we're talking about spiritual capacities, which are sort of like our human capacities, which are like, hey, I just exist in a state of like irresolvable open mind. I don't know what's next, and I feel totally relieved by that, because that it could be really good, the not knowing what's next. You know, I don't have to always think it's going to be the worst thing ever.
Right. You have nothing to stress about, right?
Wow. So that takes like, you know, that's like a lifetime of discipline.
Yeah. That's what I was going to say. That's not an easy thing to do.
Jay, think about it. It's like we know how to trade. Now, if we could just get ourselves to deal with the fact that it's going to move 4% in 90 minutes.
Yeah, I mean, that's why the rewiring thing piqued my interest there. I thought he had a little easy calculation that I can take home with me. You know?
There is an easy calculation. There's a researcher who works at Berkeley named Rick Hansen. He's a neuroscientist. And basically, if you spend a few minutes every day holding a good thought for 5 to 10 seconds, like think about your daughter, your dogs, your home, whatever it is that like the stock market, like options, you know, gamma, like whatever turns on, that will start rewiring your brain to actually look for opportunity, not look for negative circumstance. So, and it's clinically shown if you do that for a few minutes a day, within like, I think it's like 3 to 7 days, your brain starts rewiring itself.
That quick? Really?
Yeah. It's like, it takes not much time. And I think it's a really awesome training. Rick Hansen.
To all the people listening, we want to also draw the distinction between magical thinking and actual real bottom line results.
Right.
Wait,
what was the name again, Pete?
Rick Hansen. UC Berkeley. Yeah.
Yeah, I got that part.
So yeah, just make sure that even though you're holding positive or you're trying to hold positive thoughts, that you're not indulging in magical thinking. You step out in front of the cab, it will run you over.
Oh,
Right.
definitely. Yeah, I'm also not saying it's going to help your P&L, but laying in bed at 3 a.m. worrying about your open position is not helpful.
No,
Like for
no. And
life.
if you,
So,
if you could try to do something about that, because it's not a lot of people, like you said, not a lot of people. The people I know who have found success and definitions of success. So obviously everybody has a different definition, but according to my definition of success, are the people like you mentioned that the money, it doesn't bother them. You understand? It's not something that, it's not death, right? Like you were explaining, it's not that death feeling. Losing is not that death feeling to them.
right.
And the people who really get emotional about the money aspect of the game are, it's just too much for them, right? It's too much for them. And as soon as they get into a little rough patch, that's it. They can't handle it.
Because the mind will recapitulate that fantasy that it's going to wipe out your life if you lose.
Right.
So that I appreciate what Chris does, Lucci, Steve Hammer, and Wall Street Jesus, because everyone wants everyone to make money and like have a good time doing it. And I think even that attitude, no one's saying it's safe, but it's also like having goodwill, unlike our market where they're trying to like humiliate people and quitting. But those things make profound impact on traders where they feel safe, supported, all that kind of stuff. But
yeah, without a doubt. That's why, like Chris, we were talking. I don't know if you remember, we had this conversation. A lot of a lot of new traders come into the game with the pressure of, they quit their job, they have no money in their bank account, and they have to make money this week, this month. And it's just, you really put yourself behind the 8 ball, starting off from that point. You know what I mean? You're asking a lot of yourself, to make money each particular week, each particular month. Especially like we said, as these environments tend to change, you're obviously going to do good. And like you said, Pete, right? One thing you got to learn is when not to play, right? That's an important aspect of the game. When you need to make money every week or every month to pay bills, that doesn't fit well, right? So
no, you're working at a deficit.
It's tough.
And then I also think, I think so many things. Chris, you're the leader here. I apologize.
Yeah, Pete, that's great. Thank you. That's kind of the stuff that I was thinking about. It's just that the emotional aspect of the markets, the volatility and the speed, the magnitude and the velocity is so great that there's got to be an emotional correlate that no one's really addressed. And that the best thing I could come up with was that death and rebirth process that you see in like the Vajra Yogini sadhana. And I wanted to bring Jay along because he had expressed this sort of knowledge about, and he couldn't really verbalize it. He was saying how some people are just wired differently. And but we've kind of banged that around. And since this is just a Misfits happy hour, I guess what we should start talking about is what do you guys think for tomorrow and Friday?
Good question. No,
right after today, everyone's like, I don't want to go first.
Yeah, well, like we saw it tomorrow, Friday, Monday, and Tuesday, all in today. Is kind of how I'm looking at it, right? So, I felt like we eventually get this type of squeeze. If we were going to squeeze, it was going to be a pretty violent one. I'm hoping we get a little bit higher because what I have, to just get everybody caught up to where I'm at, I have a SPY position. I'm underwater in right now. I was looking to add too into the lows recently, which I didn't get a chance to do. But what I would like to do now, if we rally a little bit further, is roll out for more time on that position. So again, I don't have to stress the timing of it all. And Chris, like we were saying, that the reason why I don't see anything bullish out there. Nothing. From what I look at, the only thing bullish is that people are really bearish. You understand? That's the only bullish thing I see out there. As far as order flow and everything else, I look at, I don't see anything too constructive out there. But so then you say, why do I have a SPY position on, or even think to put a SPY position on? I want to get that out of the way. You see how violent these moves are, right? I want to have my hands on something here, especially with time. So I can look to build on that as we see constructive signs out of this market. Maybe we won't, maybe we're in a treacherous bear market. And if that's the case, that position's going to go to zero on me, and I'm going to take my hickey. But I'm willing to make the bet. Okay, here's the way I look at it. Tell me if it makes sense to you guys. I'm willing to make the bet. If I lose my money, we are going to be in a full-fledged bear market. No ifs, ands, or doubts about it, right? Bear market, lower highs, lower lows for a good amount of time, whatever it may be. But if this is not a bear market, and this is quote unquote a correction, this thing has to end sooner than later. You understand? In other words, what I mean by end, the lows are going to have to be put in sooner than later. Usually you're in that 3 to 4 month time period where the market will make a low and you'll test it and build from there, whatever the case may be. So that's kind of where I'm looking at it now. I'm willing to make the donation, right? If I'm wrong and it's a bear market, I made my donation, I lost my money on that position, so be it. But if it happens to be just a correction, I can look to build upon it as we start to see constructive signs. So that's where I'm at.
Hey Jay, the VIX is cheap right now relative to its 10-day moving average.
Well, where do we close on the VIX today? Because they
25.
And we were over
It was
30, right? 35?
Yeah, it was like 34, 33. So here's a chart for everyone to build. Take a chart of the VIX, use a line chart, then put a 10-day moving average on the close, and then put a 10-day envelope. 10% envelope on the 10-day moving average close of the VIX. When the VIX exceeds its 10-day moving average by 10-day moving average closing price by 10%, you go the other way. And
so it's at the bottom end of that.
So yeah, you're cheap relative to the 10-day moving average.
Right.
You're more than 10% from the 10-day closing price of the VIX.
Yeah, because
on the downside.
We shedded 11 points in the last 2 days.
Right. So they're sort of saying that's enough. But in this land of unbounded markets and emotions, thank you, Peter. And so people, I mean, no one's holding your feet to the fire here. If they go up, Pete, are you a seller or are you a buyer?
I mean, historically, they're selling rips, right? And they're usually selling at specific VWAP levels. So, but again, I am nothing compared to you two. I'm a nobody. But I can only talk about neurological interventions to help your trading life get better.
It's more valuable than what we got to say anyway.
Hey, so then Pete, why do people who have big winning streaks lose their minds, kind of do crazy stuff? Like, I mean, I've seen it in traders, like traders who have huge winning streaks are the same. They have the same sort of emotional dislocation as people who have big losing streaks.
Because they're invested in the vivid display of their mind. Like they've become totally identified with hallucinatory qualities that overlay reality. So I think that was a survival mechanism for humans for a very long time, right? The use of language, the use of fantasy in order to construct societies. And totally, it's sort of like trading. Like actually you're doing inner trading. You're always taking a side. But the unfortunate part for us as human beings is we're caught off sides by our own mentation. And so what you want to do is institute disciplines that usurp and kind of poke holes in that hallucinatory existence, So I think I just wanted to, before we close the day, I wanted to throw in 3 quick interventions you can do if you're having a bad day.
Well, that comes in handy.
Get on it, kid.
Okay, so the first thing you want to do is get optic flow. So you want panoramic vision. Okay,
So in English, that's zoom out, not zoom in.
You want to get away from a screen and literally go outside, because once you go outside and you have a panorama, it turns off your hindbrain that is associated with panic, adrenal uptake, and it just literally turns off that system. Because if you're a human being and you're an animal and you're on the Serengeti, you can see everything. If you're trapped in a cave like we are all day trading, your purview is the screen, and man, it's just so full of like really threatening data. The other thing you want to do is the physiological sigh. 2 quick in breaths and a long out breath. So what that does is offloads carbon dioxide in your tissue, which is building up when you're stressed out, and your body starts to think it's kind of like dying because this carbon dioxide, you're not oxygenated. So you want to do 2 quick in breaths, long out breath for like 5 minutes, especially if you're like just getting into a position, you feel stressed, but you don't want to exit the position. Tell your body it's not in some sort of like mortal danger, and then you'll be able to reflect on your checklist of like whatever indicators are like guiding your trade, and then get used to being totally relieved. No one's going to come through your screen and kill you. Yeah, you might lose some money, but a lot of the time you make money. So those are 3 like I work in hospice care a lot. I teach meditation to dying people, and those are 3 things that really help people who are actually going through the transformative process of exiting their mortal coil. So, and those are going to work. So I just wanted to put those out there before we
really cool
exited today. And, always grab me in the Steamroom on DM if you need any meditational interventions, and I'll help you out. And Norse will too.
Hey, is getting out of a losing position like dying?
Yeah, it is, because you had a bias and you're totally, your self-image is sort of like tied to, that's what we do all day, is like we're tied to a self-image, and anything that corrupts that self-image, we hormonally interpret as like an ego death. And so to your point earlier, meditation can help you get really acclimated to it. And so you kind of wear out that shoe.
We're going to need to set up, especially if this if this environment lasts for any longer than beyond a week from now. We're going to have to set up a lounge in the Steamroom where people have 15-minute sessions, right? You can even make some money for yourself. You charge people for a 15-minute session. They come in, you rewire their freaking brains, do what you got to do, right? And we got a lot of, I could sense already the anger in the room. We need to calm people down a little bit.
Yeah,
it's like the med tent at a Grateful Dead show or something. Everyone took too much acid.
But in this case, it's a big thing, right? The show Billions, I don't watch it that much, but didn't they have like the psychiatrist in the office there, right? Where you go in with what's on your mind and what's bothering, right? So,
Wendy, Dr. Wendy.
Yeah.
Hey, Pete, my brother runs the tent at the Dead show.
Does he really?
Yes, my brother.
He runs the what?
He runs the tent, and he tells people, we can take you to the hospital, but you'll still be tripping and you'll miss the show.
God almighty.
So I suggest you just sit here and chill out.
That's
so
funny.
you do that in the Steamroom, Jay.
Yeah.
Right?
Yeah.
You put them in there and you say you just sit here for a few minutes and listen to the show.
Yeah.
I love trading. I wake up every morning so stoked to trade. It's almost like
You like the game though, right? Not the, and it's not even the money thing. You like the game, don't you?
I don't take many trades. I'm just fascinated by
Yeah, me
macroeconomics,
too.
how money moves.
Yep.
Like, yeah, the psychology behind it. It's really interesting.
Yeah, like that's how I am. That's how I always been. Like even a lot of the stuff people used to say, why do you waste your time reading this stuff, looking at this stuff? You know, it's not actionable to you. You're not trading off it. I just enjoy it. You know what I mean? I love everything about the game. So, but yeah, a lot of people after the money. That's
How are you doing, Chris? So do you want to talk a little bit before
yeah, boy, he was trying to get the easy way out.
No, I'm like, all right, you guys, thanks for coming. It's been an hour.
Well, the last time you were short, the market made a nice little move.
Oh, what do I think is going to happen? I thought
Yeah,
I was positioned for today. It came too fast, too quick. Is it too obvious, like we're talking about, right? And as Peter was talking about, right, like the understanding that you have to be able to think around both what you think and then the other side, which you were saying that's what we do, which is now where I am, where I'm
Are you looking to sell a rally eventually? Is that part of your plan?
I think that rally off the low was the PPT the big 100 handle rally, and then it went flat for what, a day, 2 days, 3 days, and then they didn't even retrace any of that vertical rally off the low. Right, they only got to like a quarter of that, right? And as Peter knows, Steve Hammer teaches that vertical retracements trade out. I mean, is it a good low? From a Stottlemyre perspective, it came off the low like a moonshot, right? So that's a tail. That's a good low. That means that the real support is where we went sideways for the last couple of days. So you know, the fact we didn't get a chance to buy them cheap, like we should, there's definitely unfinished business at the 4120 level, even down under the figure, even like into the high 4000s. There's definitely unfinished business from a Stottlemyre perspective there, but they're not giving us a chance at it. You know, so to my point, is it too obvious? I don't know. Could they go much higher? Yeah, you get a shit unemployment number on Friday and they'll be like, oh, that's the last rate hike and we're going to be, you know, like this is your world right here. You've got the shorts. I mean, I don't think there's any shorts. I don't think the shorts are caught. Like my friend Walter was like, no, the shorts are caught. I'm like, no, they're not. The market's so oversold, right? That all the sentiment numbers, right, were so bad that
they've been covering the last few days. They've been covering.
Yeah, right. The shorts, all the shorts are out. Even the shorts are long.
Yeah.
Right. And so to me, this is levered longs trying to make themselves right.
Yep.
And then, you know, okay, so we've seen the Fed do this for a long time and all the central banks just, you know, it's cheaper to keep them up here than to bail them out. And you know, and there's, you know, like price stability. God, the whole press conference, price stability, price stability, price stability. There's no price stability in the markets. God, you look at the price of crude, anything, right? There's no boundaries.
He had a couple of doozies in that. What was the other one? The economy, softish landing.
Right.
Softish.
Right. So you asked me what I think. I think there's no structural boundaries, which means that any sort of support and resistance are negotiable at best. And we know now that PEs are negotiable, right? So we're in a purely momentum game. And you saw the way they sold them the last couple of weeks. I mean, there was not a bid.
There's no real buyer. There's no real buyer.
No, the only buyer is the Fed. It was the PPT who came and ran them 100 handles out of nowhere, right? They were sitting there at 40.65 for like 2 hours.
I know. See, that's what I think. You call me conspiracy theory with this conspiracy theorists with this Fed. I really like. Here's the way I look at it. Right, I take a step back, right, and not looking at the day-to-day moves, the intricate details here. Right. I see a Fed that can't have any sort of meaningful rally, right? It's looking to tighten financial conditions. So anytime this thing finds momentum to the upside, they got to spit on it. So you're going to have them come out hawkish as all can be. He's going to send out Brainard. He's going to send, like he did, right? He's going to send out any dove he can to sound hawkish to keep a lid on things, okay? But when it gets down to these levels down here, right, he'll start being a little less hawkish. It's on a little more dovish and put a little floor in. So it's kind of this big range bound market we're in, where I think the Fed is really pulling the strings because there's no real buyer in sight.
Now, the only buyer,
Right.
I mean,
What about the bond market too? Who's what? I mean, that's a whole other can of worms, right? Is
I
anybody
mean,
there?
what about the diversified portfolio guys, right? You
Oh,
see
they're
the
dead. They're dead.
right, dead, and all of a sudden, guys, I have a friend who runs a Vermont community trust for like the whole state, and he's like, oh no, we don't ever look at our investments. Those guys have got us diversified. I'm
Right,
like,
right, right.
yeah, maybe you want to maybe you want to give him a call,
Yep.
right? Like, but so what do I think? I think that there's no boundaries. I think there's no structure. I think that the only bid is the Fed.
So in that case, how's this resolved? Something breaks and the Fed has to pivot? I mean, is that the end game? Is that the only thing? Unless you think a soft landing is possible out of this. I mean, how does this resolve? You know what I mean? The Fed can't have a rally to new highs here. They can't have it. You understand? They're
No,
going to do
people
everything in their power to prevent that from happening.
people
Right
will
now.
just start screaming Zimbabwe.
Right. So, so the upside, again, you're capped. There's, as a trader, there's room, but
The debt levels at where we are at 5% interest rates are going to slow GDP, right? You see that already, right? Like the
yeah,
debt levels are a self-governing thing. Like you
the
can't have,
economy is already slowing. It's going to slow,
right? I
and
mean,
it's going to start to accelerate.
right.
So that's what I mean. So eventually something's going to break, right? And then the economy slows down. You go into a recession. We were talking about this last year, right? That ultimately that's what it comes down to. The Fed has got to create a recession, right? Slow
Yeah.
things down and then do their thing. They have no other playbook.
Other than it's cheaper to keep them up here because
Yeah.
you look at the size of the margin debt, it's monster,
Yeah.
right? So that's why they're all about the VIX, right? You can't see the VIX blow out because then the margin calls come and then the collateral chain shortens. And that's what put Bear Stearns out of business overnight. So they can't, so the VIX can't explode. So it's a managed down move if it happens.
Exactly.
The only problem is that there's no bid. Like you saw, there was no bid for
No
days.
liquidity, absolutely no liquidity.
Top of book, there is
Did you
nothing.
see that chart top of book that it broke through the floor? There's nothing
Right, right. Like,
left.
right. Like I just keep telling my friends at the CFTC, the guillotine, the Chanel guillotine is coming outside your house. You're the first stop
Yeah.
when the revolution comes.
Yeah.
Like the people are going to be pissed and they're going to be in the street. And where were the regulators? They were just, they were making sure your trading card was filled out correctly.
Yeah. All right. So basically, folks, we have no.
And what was that? We're supposed to have a relief
It's not fair. That's
Yeah, right. No, we know it's not fair, but it's also not static, right? Like you can actually do this, people. You can do this. Just make sure you get out of losers.
Yeah.
Right.
Exactly. Exactly.
Right. And it's not going to be pretty. And you're going to feel horrible. It's like dying.
Yeah. And there's nothing wrong with sizing down. You know what I mean? The less
Right.
stress, take it easy. Right. I mean,
Yeah.
this is not the environment to try to kill it in.
No.
Enjoy the process, try to make some money, and
Right.
try not to get lumped up.
Right. You guys, see you later.
Yeah.
Okay. Good. Chris,
Peter.
Everyone's like shook today. So
Yeah.
Everyone what? Oh,
take
sure.
care. Shook. I mean, that was a crazy hour of trading. So I hope everyone takes good care of themselves because you deserve it.
I'm
So.
working on rewiring my brain as we speak over a couple.
All right. See you
Thanks,
later.
guys. Have a good
Thanks.
night. Get
Bye.
some rest.
Bye.